Thank you, Anthony. I'm Fawzi Hananum, Chief Development Officer at Cornish Metals, and thanks for the introduction. And of course, the right setting to be here, surrounded by pewter plates on the walls, that are made from at least 85% tin. And I read an article yesterday in the Telegraph that talked about the origins of tin in Cornwall finding their way to other areas in the world, dating back to about 3,000 years. So this is our disclaimer. If you want to read that, we have a full presentation on the website, but I'll skip over that right now. So a few words on the corporate structure and our information. Currently about a 95 million pound market cap, of which half of that is actually cash on our balance sheet following a large fundraise that we completed in Q1 of this year. Major shareholders, we have two strategics, Vision Blue Resources, who've been an investor since 2022, having anchored two fundraisers. And we also welcomed the National Wealth Fund as a second strategic investor earlier this year. So it's great to have two very supportive investors on our register. In terms of the investment opportunity, here's some key points. I won't run through them now, as we'll run through these in more detail in the presentation. But in essence, we own 100% the South Crofty high-grade tin mine in Cornwall. It's the highest grade mine or deposit that's not currently in operation. Got strong community support. Having been a historical mine, there's a lot of existing infrastructure, mine infrastructure, as well as the location itself. And this does present an opportunity for secure domestic supply of tin to the UK and Europe, where currently there is no primary production of tin whatsoever here or even in North America. And on the right-hand side, we've got some of the key metrics from the PEA study that was released last year. I'll run that in more detail in a few slides. So just a quick look at the board and executive management team. They both bring significant mine execution and operation capability, which is quite important. And just last week, we announced the appointment of the two gentlemen on the bottom right, Dave Howe, our new general manager for South Crofty, and Guillermo Alcazar, the new project director, who will be very important in terms of leading activities forward to get this project back into production. So I thought I'd pause and talk a little bit about tin before talking about the project again, because tin tends to be an undercovered commodity despite its importance to modern life. If you look historically at tin's applications, there are more the traditional applications of tin plate, pewter, some more decorative and other industrial applications. However, since about 25 years ago, the landscape for tin changed considerably. And that came about when the EU banned the use of hazardous materials in electronic components. And so that meant goodbye lead, and the only suitable replacement for that was tin. So overnight, we pretty much saw a doubling in the use of tin, and you can see that in the chart on the right, where you see that solder now comprises over 50% of uses for tin. So these go into electronics and are essential for energy transition applications. And that's what we show over here in terms of what are the main drivers for tin demand in the next decade and beyond. The blue bar at the bottom, that's the baseload demand. Between 2020 and 2030, it's not expected to move much, just very small increments upwards. But the main drivers are going to be solar, EV, and 5G and other advanced computation applications. Solar actually was a bit of a surprise in terms of how much tin is used. Maybe not as important within solar, but solar as an application is very important for tin, and currently consumes about 10% of global tin use, and about 20% of the tin used in solar. So that is quite significant. We see continued growth in that area. EVs, the EV story is similar for tin as it is for other base metals such as copper, in that you have much higher loading of these materials in more advanced vehicles, be it in the hybrid or EVs. So as we see a greater adaptation of EVs, you'll see greater loading of tin in these cars as they're becoming more more electronics used in there, more active safety. And when we move towards self-driving, which is something I definitely do not want to see, but of course will encourage more use of tin. And then, of course, AI, which is the biggest buzzword around, and a lot of concerns around, will there be enough power to drive the added data centers required to really run these. But when we see more complex AI models being used, these are going to need more processing power, which means more chips, which means more tin. So tin is really something that is essential for modern life and for the energy transition. And it's really these applications that are going to drive forward the demand for tin, while other applications will remain as a base core load. So that's, our view is quite positive on the demand side. However, when we look at supply is very concentrated for tin. We're looking at about 2/3 of mine supply from Asia, predominantly China, Indonesia, and Myanmar. And when you look at refined supply, that number is about 80%. So a very high concentration of tin supply in the Far East. But if we look over the last year or so, there's been significant disruptions from the number 2 and number 3 largest suppliers of tin. Myanmar, since August 2023, had a ban on tin mining in the Wa state, which is where about 70-80% of the country's tin production is coming from. Recently, this year, they've talked about removing that ban, and they are moving forward towards removing the ban. However, we don't think that that's going to fully take place until sometime later this year. It takes time to get permits in place and to bring the workforce back, and some of these mines are underground, so there's some dewatering that's required as well. And we also expect that Myanmar will not go back to its historical levels of production. So we'll continue to see some sort of shortfall from there. Indonesia last year had about a 20,000 ton reduction in production, and that was due to a change in the export permitting that they have in the country. They've moved from annual to now 3-yearly permitting, and that caused a disruption in the beginning of the year where there was essentially no tin at all exported in January, February of last year. This has now recovered, so it's not an issue anymore, but it just demonstrates how susceptible we are to disruptions in tin supply. And more recently, of course, in the DRC, given the advances of the M23 rebel group in the northeast, that meant that Alphamin had to announce a suspension of operations at their Bissi mine, which is a very high-grade 20,000 ton producer, and that was suspended for about a month. They have since announced that it's coming back and ramping back production. But this just demonstrates the susceptibility to disruptions. And what I've highlighted down there, we're looking at about 1/3 of global supply was disrupted over the last year, which is very significant. When we look at tin pricing, of course, tin pricing has shown some volatility due to these events that I've just talked about. On the day of the announcement of the suspension of Bissi, we saw 5-10% increase. When they announced the resumption of operations, 10% drop. It happens. However, tin remains the best performing base metal since 23 year to date. We're looking at about +8%, and that's because the market remains quite tight. Last year, we saw a deficit of about 16,000 tons in the market. We believe that deficit will remain. We may see some balance in the next couple of years before we see a deficit coming back to the market. And so when we see that, and with tin being labeled a critical mineral in the UK, in Canada, US, and several other countries, it is quite surprising that none of these countries have any tin production, and so are fully reliant on imports, be it from Latin America or from Asia. So we are quite confident that the tin market will remain quite well supported, and with South Crofty, they're offering the opportunity for some of Western supply to be secured within country. So a little bit about our South Crofty mine. It's located in Western UK in Cornwall. We acquired the asset in 2016 out of administration. This is an asset that has been in production for over 400 years before closing in 1998. And the reason for its closure was not because they ran out of tin, but rather because tin prices had been extremely depressed at the time. In 1985, there was a collapse of the tin pricing cartel. Prices shot down from mid-teens to about $3,000-$4,000 a ton, and that meant that all hard rock tin mines closed. South Crofty was the last one to keep operating. It kept going from 85 up until 1998, albeit not really generating much money, But being a high-grade, low-cost mine, it was able to keep going for several years before it finally shut down. But literally the day after closure, there have been multiple efforts to bring this mine back into production. It's now been 27 years. We're hoping that in our hands, we'll be able to bring it back into production in the next couple of years. And there's been a lot of effort and a lot of milestones that we have managed to achieve, especially since 2022, since Vision Blue Resources became a shareholder, providing significant funding. Now, a couple of important points that are on this slide are that this is a mine that is permitted. So we can commence construction today if we had the full funding. Permitting, as we all know, tends to be one of the risks in terms of the timeline of bridging projects into production. We have strong community and local government support. And now with the National Wealth Fund as a shareholder, that demonstrates national government support as well. It's going to be a very low impact operation. It's underground, and there'll be no surface tailings, where all tailings will be paced and backfilled into the voids in the mine. So there is a benefit of having about 8 million cubic meters of void space in this historical mine, where we could put the new tailings that we'll be generating. And of course, this is a very high-grade mine, which I'll demonstrate on the next slide, where we have here all known deposits of tin that are not currently in production. And it shows that South Scrofty is by far the highest grade non-producing mine at about 1.5%, which is quite significant. If you put that in copper equivalent terms, we're looking at close to 5% of copper equivalent. In April of last year, we published a PEA for the project, and this shows the potential for this to be a long-life, low-cost, modern underground mine. It generated quite attractive economics, $200 million NPV, about a 30% IRR, and a pre-production capital of just under $180 million US, which we're looking at about 3-year payback. Over a 14-year mine life, we're looking at about close to 50,000 tons of tin production. However, what I'll show on the next slide is that there's so much more potential. So what we see here, if we just focus on the dark line at the top, it shows the production profile over these 14 years, which doesn't look great in the second half as it comes off. However, if you look at in the first 6-7 years, we're looking at an average of about 4,500 to 5,000 tons of tin per year, which is equivalent to about 1.5% to 2% of global mine production. So it is representative, but not too big to move the market. However, like I mentioned before, this is a mine that's been going for a long time. The tin-only portion of the mine has been operating since 1906. And we know that there is a lot more tin in there. The mine plan was designed on the basis of the last published mineral resource estimate. To increase that would require a lot more drilling. It's not the best way to spend money when we know that the ore is there. So what I'll demonstrate in the next few slides is why we are quite confident that there's the potential that what you see in that circled area on the top, that profile of about 4,000 or 5,000 tons a year, that's what is likely to be the production profile for many, many years to come. We're talking decades to come at these levels, with potential for expansion as well. And that just means that we'll continue to have strong after-tax cash flows for a long time. We're looking at an EBITDA of close to $85 million per year, after-tax cash of over $60 million per year. And that's based on one, strong tin pricing of over $30,000 a ton, but also that this is going to be a very low-cost operation. We're looking at under $14,000 a ton, all in sustaining cost. So that means very high margins per ton of production. I'll just look at focus on the image on the bottom right, which is a cross-section of the mine itself. The upper portion, the kind of copper gold colored bits, that's the first 400 meters or so. That's the mineralization hosted in sedimentary rock, which is what was mined, say, from late 1500s up until about 1900. And that is polymetallic tin, copper, and zinc mainly. However, once we get into the granite, which is the silver shaded area at the bottom, which is what we're focused on now, that is tin only. And we're looking at a high grade 1.5% tin average in that area. And importantly, you can see that there's a lot more gold-colored bits than there are silver-colored bits. That means there's been more mining taking place then. But where you see, on the extremities, the mineralization on the top parts, where there's mineralization there's mineralization below in the granites as well. So that just means that the deposit is open, in all directions and at depth, and that provides quite a lot of confidence that this is going to continue for many years beyond the current reported resource. And we could look at history to kind of provide some comfort towards that. What we show here is the cumulative mine production, which are the dark bars, and the cumulative metal added to reserve, which are the light blue bars, since 1974 up until the mine closed about 23, 24 years later. What it demonstrates that every single year, the miners have been able to more than replace on a one-for-one basis what has been mined. And so the fascinating stat here is in 1974, the mine's official mine life remaining was 3.5 years. 24 years later, it had 4.5 years of mine life remaining. So when I stand here and tell you that our current mine life is 14 years, probably in 14 years, I'll come back and say, yeah, we still have another 10, 20 years remaining. And so that's basically what it is, that a lot of through the development, we're seeing a conversion of inferred into indicated material in addition to the addition of new material into the resource. And that's essentially what we see on this chart here. This is a cross-section of one of our mineralized lodes, where you see the indicated bits, that's where there is sampling done on both the upper and lower parts of the development, where there's sampling only on one side, that is an inferred resource. But what we see is through development, we will be able to then sample that other side that upgrades the resource to indicated, at the same time adding a new level of inferred. And to further support the potential additional to exploration upside, in November, our exploration team produced an exploration target, which is essentially looking at these kind of blue highlights that are up on the top side of the chart, where they've delineated the potential addition of another 6 to 13 million tons to our existing resource of 6 million tons. So we're essentially saying from near mine, near term upside of double to triple the existing resource. So that also further demonstrates what upside we have at this operation. And that's literally just looking at the existing mineralized loads that we have in the resource, excluding other mineralization that we have within our mine permit area, which is outlined in red. A little dry throat. Yeah, thanks. In terms of our approach to sustainability, of course, having a social license to operate is core for any mining operation. If you don't have the community on side, it's impossible to have a long-term mine going forward. So that is quite important to us. Firstly, from the environmental side, just give one example. This mine is flooded currently. We are currently dewatering the mine. We're about 300 meters down the shaft currently. But historically, if we go back several decades, when the mine was in production, say in the 60s, 70s, the tailings were being dumped straight into the river. The river is called the Red River for obvious reasons. That stopped, of course, later in the 20th century. But since the mine flooded, all the overflow has been flowing into the river anyway. So while it's not as bad as tailings, still metallic content in the overflow. Since we started dewatering the mine in late 2023, all the water that's being pumped out is being fully treated in our water treatment plant. And so the water that's now being put back into the river is nearly drinking quality water. And so overnight, you're able to see the difference where the water was previously murky, now is crystal clear. So that's something that the local community is able to see and to see that there are some benefits from this operation. We do a lot of community engagement. Of course, that is very important. So they understand with every step what is entailed, whether it be drilling operations or when we're going into full production. But this is a town, both Camborne, Redruth, and Poole, that have a long history of mining. So we're quite fortunate that there is a lot of support for mining. But given that mining has dried out several decades ago, there is a want for jobs. So this mine can generate upwards of 300 well-paid direct jobs, and most of which will be local to the area, and then another 1,000 indirect jobs in the area and nationally. We do a lot of support as well towards education in STEM to promote mining, and you can see a picture over there, one of my colleagues giving a lecture at one of the primary schools in the area, and we also support tours to the Givor Tin Mine Museum in Cornwall, just to show, to provide a better understanding of the importance of mining and also the importance of tin to modern society. So I mentioned the fundraise earlier in the presentation. In Q1 of this year, we announced and closed a £57.4 million fundraise that was anchored by both Vision Blue Resources, who increased their stake from 26 to 29%, having put in £80 million, and also welcomed the National Wealth Fund, who invested close to £29 million in the fundraise, with the rest coming from existing and new shareholders as well as retail through a retail component. Now, this fundraise enables us to continue to advance and de-risk the project and provides funding for another year up until the end of March 2026, at which point we would expect to have the project debt finance in place, as well as announce a final investment decision. But importantly, with this funding, that would allow us to bring forward some capital items, for example, to commence some works on where the process plant will sit, also placing orders for long lead items, which would be mainly the winders to be used for the production shaft, but also to complete current important activities, which are the dewatering of the mine and the refurbishment of the main shaft. So when we're looking at our current market capitalization of about 94, 95 million pounds, and we compare that to what I talked about, our annual cash flow that this mine can generate of over 50 million pounds and 60, 70 million pounds of EBITDA, we see a lot of potential for re-rating of the project. Of course, that comes as we will de-risk the project. And also, when you look at that NPV of 161 million pounds, $200 million, as I mentioned, that is based on the current resource. If we factor in the expected longevity of the asset and the potential upside to the production rates, we expect that to be significantly higher than what it is. So we do see over the coming years, we do expect a re-rating of this mine. So in summary, this is the highest grade tin asset that's not currently in production. It is also one of the most advanced projects not in production, where we expect this to come online later this decade. It is permitted, and we have full community and local government support. It's going to be low impact with no surface tailings. Like I mentioned on several slides, significant upside to both the production throughput and the mine life. And of course, tin is an overlooked commodity, but it is essential for anything in modern life. Our mobile phones, our computers, pretty much anything. So we cannot live the way we do without tin. So South Crofty presents that opportunity to reduce reliance on imports, mainly from the Far East. Thanks for your attention, and open to questions.
I just had one question for you, actually, in terms of just what was the motivation in terms of, or the background to the government investment, and does that come with any additional sort of support or obligations?
So when we look at the government's support, which we're very, very pleased with, there's alignment here. So part of the reason why they invested here is one, local regeneration, so the creation of jobs that this mine will bring about, but also alignment to their net zero strategy, given the importance of tin for a lot of energy transition applications. So that ticks these boxes, and of course, through a long due diligence process, we're pleased to have brought them on board as investors. That provides, now we have our two biggest investors make up about 57% of our register, which is going to be extremely important when we close out the project financing, that we know that we have support from a good chunk of our register. And in terms of additional requirements, they are an equity investor like anyone else. Being a large investor, they do have the right to appoint someone to the board, which they have done already, and anti-dilution rights. But otherwise, there are no other additional requirements with them as a registered investor. Yes, please.
Great to see the progress you've made. Historically, the mine has employed highly skilled miners, and of course they have long gone. So what are your plans to sort of recruit the necessary people to work in the mine?
Well, in one word, training. That's going to be very important in terms of getting to the quantum of people that we need. But we've been quite fortunate in our last few years as we were moving this forward of being able to attract talent in two different ways. For some of the more senior roles, we've seen an onshoring of people from Cornwall who have been working for a few decades in Australia, South America, South Africa, who at this stage of their career feel it would be good to come back home. So currently, one of our recruits, we announced last week, Dave Howe, he spent most of his career in Latin America, and he's coming back. He's from Devon. He's going to get a place in Cornwall. So we'll be able to attract people who want to come back to their home country, hometown. Same goes for a couple of our senior guys, our mine manager and our studies manager coming from Australia and South Africa, returning home. So we'll be able to attract some of these more senior roles. But on the miners roles, we earlier this year, actually earlier last year, we looked to recruit about 35 to 40 miners to work on the refurbishment of the shaft. We put out our job ads, and we were surprised by the interest. We had postings for 30, 40 people, and we had upwards of 300 applications that were not all miners. Some of them have direct mining experience, but a lot of transferable skills from other industrial roles, whether it be in transport or there's also existing China clay mining still happening in Cornwall. So we were able to recruit these guys, and we have a long list of names of other potentially interested people, where there will be some training required to get them up to the skills to operate the mine, and that's going to be part of our recruitment drive before we get into production. Yes?
Yeah, with that long history of mining, what's the depth of the mine? And the growth, is it lateral or is it at depth?
It's going to be both. So currently the shaft itself goes down to 770 meters. The deepest mined areas are about 850 meters. And where we'll restart mining is where we left off in 1998. So it's going to be a lot of lateral development, but also at depth. But it took about 100 years to go from, say, 400 meters to 800 meters. So there's a lot to mine out there before going too deep.